Alright, this is going to be a weekly recap from the 31st of January to the 4th of February. And I'll tell you what, this really sucks because this is my third red week in a row. And even though the numbers are somewhat small except for this one, I just hate the fact that I had another red week that could have been a green week, very similar to the other 2 weeks if I didn't have a dumb trade. And you know, this one was my dumb trade right here on the 31st, and I'll go over it. This was my first option trade. Such a horrible sell because my speed key didn't work with options, so I didn't get out when I wanted to. And, you know, I just got really taken advantage of in terms of the volatility, just really selling at the low. Literally with this option trade right here, if I were to have sold the next minute, I would have gone out literally break even pretty much. But that wasn't the case. This was my dumb trade. I ended up down this week $11. You know, if I were to delete this dumb trade, I'd be up on the week. Same with the other 2 weeks. The issue with this week here was that I accidentally freaking fat fingered and bought, you know, what was going to be a $300 position, $3,000 position, because I added an extra zero. I fixed my issue there, and then this week following after this one, I went into a trade and I did not check the bid and the ask with ENZC, and there was a horrible spread between the bid and the ask, and I hit the ask. I sold at the bid, realizing what I did, and that was a pretty crappy trade there with ENZC. And now this week I just had a dumb option trade. I'm just gonna stay away from options. I made already adjustments so I don't accidentally fat finger and get in too large in a position. And you know, also just to be alert of the bid and the ask, and then no options. If I have another red week, it's gonna suck, but if I trade the best of my abilities and the setups just simply did not play out, that's totally fine. You know, I just don't want to make any dumb mistakes. And besides that one option trade, I did pretty well for what it was that week, considering the fact that, you know, out of these 7 trades, only one of them worked. One of them really worked, but then all of these were like no's and kindas, and maybe they didn't work right then and there, but they eventually did. So yeah, just kind of unfortunate in that sense, but a lot of progress still. I do like how, you know, I traded 80% of my trades according to my dollar risk level, although I do want to trade larger in general, just not again with dumb setups like options or anything like that. But on the setups I have been profitable with, which is a morning panic bounce place. Let's go ahead and go over all 7 of these trades, starting with ILUS. I'm going to get a drink, but it seems like I traded ILUS 3 times and PUGE 2 times. That's pretty interesting. So yeah, let's go ahead and start with that. Alright, the first trade is with ILUS, and this is a morning panic bounce play. It seems like it worked, but not when I was in it. And that was on the 31st. So let's look at ILUS for the 31st. And I believe I traded it twice on the 31st. Right here was the 31st. Not the worst red day. It's just not a very volatile daily chart. At least it's not like at its complete lows. But at the same point, it's nothing too crazy. But let's go ahead and see how it looked on the 31st, which was right here. Let's just zoom in from here. And my entry was at 940.267. 940.267 was right here. So it looks like the green candle 267 my entry is. So I was in right here thinking it was a morning panic bounce play, and it's gonna play out here, a downtrend, and I could probably draw a trend line, and it broke the trend line. In fact, let's go ahead and do that since I've started to really use that a lot. Maybe not the best one. Perhaps I should, if I know how to remove this. I think if I do it from here, this will make more sense. I guess I have to connect to another point, but it seems like it kind of broke it here, and I was in it for that reason here, just looking like, you know, it was trying to do some kind of a turnaround. And as you can see, that one did not pan out. I got out at 944. I did sell in 2 pieces, and that was an average of 264. So 944, I was out right here. This candle at 264. So right here was my sell in theory, and my entry was around here. And this was something that I applied last week with morning panic bounce play setups, in that if I'm in the setup and it doesn't look like it's immediately working, or maybe the price action looks horrible, I'm gonna go ahead and just sell half of my position. So then if it works, I'm at least with half my position and I can be able to benefit from that. But because it looks kind of ugly and it's not working out the way I wanted to, if it breaks my risk level, if it gets to my risk level and I have to cut the trade, at least I don't have to cut the trade with my full sized position. So that was what I did here with ILUS, and I'm very happy. I tried that. It looks like a $7 risk level, and the other one looks like in theory I traded the right amount. But let's look at the next attempt at ILUS, which was the same day for a morning panic bounce play. This time I was in at 2617 at 946, the time period. So 946 was right here, and 2617 was my entry. So I was in it basically right here. Not the worst entry actually, right here at the bottom at 947. I didn't buy it at the top of this candle or anything like that. You can see how it tried to hold itself right here and it broke under it. So it looks like it was trying to hold itself right here again. So I got in again. It didn't work out here. You can see it continued to downtrend, and my sell was at 949, 2608. So 949, 2608. So right here was my sell. It just didn't work out on this candle right here. I know I sold in two pieces in this trade too. I probably sold some maybe right at my entry, and then I sold another piece, and that one didn't work out here. But one thing I was interested in terms of trading this twice, because I don't normally try morning panic bounce play 2 times, the same setup the same day. The thing different with this one is that it looks like it was gonna hold 26, or the idea is that it had a bottom right here at 261. But if the day low breaks, if the setup fails, which it did in this case, 26 was probably going to be a level of support that I could be able to sell it to. It's not like it breaks the day low and it just tsunami panics a whole nother leg down and you're out for a crazy loss. No, in theory the idea is that if the day low were to have broken, it could probably try to catch itself at 26, so I don't have to sell for a huge loss or anything like that. And that is what played out in this case. I was able to get out of that trade, losing just 90 pennies with a $260 position. So I think that's pretty good in terms of how much I put in, how much I lost on a setup that didn't play out. And it eventually did turn around, but it did downtrend one more time. It wasn't until it finally had 2 green candles in a row, it seems like, that it actually decided to make a move towards the upside. And then at that point, let's just say an entry at 26. It did get as high as 26.8, so the range wasn't even that nice to begin with. But I guess that was just me trying to trade something that looked ideal, but it wasn't, and it just kept failing. But this one could have broken past VWAP and up trading a bunch more into 27. But ILUS is kind of known to do stuff like this in the mornings, which is why I traded it, even though if it's not super ideal, not the best daily chart. I'm glad it worked out eventually, but that was a great attempt nonetheless, and I don't regret those trades at all. Let's look at the one that I shouldn't have traded. It's gonna be hard because I won't be able to show the chart of the option, unless I can go back here perhaps. But let's look at SPY. This was the option trade, and this was a put, so I was basically putting in money betting that the price of the S&P 500 was going to go down. So let's look at the 31st for SPY. '31st is right about here, so it kind of had like a little bit of a panic right here. It held itself together and it started the uptrend on that day, and it has continued a bit since then, but that was the day when I first did that with SPY. Let's look at the 31st, which is right here. Let's just highlight the entire day until we have a time to base this off of. I was you know, again, this isn't the price of SPY. SPY is a $400 you know, ETF, so this was an option which is very volatile. But let's just go look at the entry and exit in terms of what was SPY doing at the time. Let's look at some excuse me, 1137, 227, 1137. We'll just zoom in right here. 1137, 227, and 3 was right here. So again, I was thinking this thing was going to downtrend because of the overall markets, but most importantly, it had a bit of you know, a high right here and a lower high, and then I thought this was going to be the next lower high, and there was a level of support at 444, but my idea was that it was going to downtrend, at least make a move towards the bottom before you know, it could turn around and do something like that. And I remember being in this and thinking this was some super sketchy freaking price action, and that's true. You know, instead of it being a lower high here, you know, it uptrended and it broke the day high, and this was pretty impressive. And I would have lost a lot of money on that option if I didn't, you know, stick to my plan. But I was not able to exit at a good price, because when I tried to exit the order with my speed key, I just didn't get out right then and there because it didn't apply to a stock. It wasn't a stock, it was an option. So I had to manually get out, which meant I had a horrible execution. But that's fine. I think that's just a message from God to just stay away from options for now. I did get out 11:40, 3 minutes later. Horrible exits. I literally got the bottom of the candle during that option. Let me see if I can just get a picture of it, as that would be ideal. Alright, we got an image. Right here was the stock, but the option was right here. And as you can tell, I was in right here, right when it was just looking like you know, it was right here in the sketchy price action. I was in it right here when it was in theory just consolidating, right? Just consolidating, and then it has a sketchy price action. But I literally sold at the bottom at 11:40 when it had this wick right here, and I wanted to get out before I made the wick and it looked all sketchy, right? But I wasn't able to, again, for what I said earlier, and I was able to get a crappy exit literally at the bottom, which really sucked for my first option trade. And then as you can see, the next minute I would have been able to sell for pretty much the same price that I got in profitably. You know, it had this candle right here, and then it did eventually, you know, uptrend and break the day high, which, you know, very volatile for options. I mean, it went from $2 in theory all the way to $1 very quickly, just 50% loss right then and there. And with options, you can only if you trade just one piece, I think it's like one contract, you still have like, you know, it's still like a $200 position in this case example here. So just really horrible exits. My entry wasn't bad, the setup, the idea wasn't horrible, and what really messed with me that day is that I think I called the price action here, if not here. Yeah, I called it here when it broke this trend line right here, and then I called it here, and I called it, I believe, here, and I just finally got in on my first option trade, and that's the setup that didn't work out, and that was pretty annoying. So I'm just probably going to stay away from options for now on, just because of the fact that I should probably just focus on what I can do better, which is morning panic bounce plays. I've seen a lot of traders who eventually stop trading, they stop updating their stuff on Profitly, and the last thing they're doing before they quit is trade options, and they just keep losing there, which is even more dramatic. The losses because of the volatility. Really crappy trade. They're really bad. A whole bunch of things, but at least the chance that something like that can happen again is pretty slim. So as long as I stay in the game, it's going to be profitable in the long run. At least that's how I look at it. So that was the option trade there. Let's look at ILUS for an imperfect morning panic bounce play. Big surprise, it didn't work out. Let me just get a quick drink and we'll go over it from then and there. Alright, let's look at ILUS for the first day of February. So the first day is right here. Not as nice as the previous red day, but let's look at it and see how it was on the first, which was right here. Yeah, not horrible. You can see the nice downtrend from 25.5 to 22, I guess 23. So 25 to 23 is about an 8% drop. So I can see why it's not perfect, because it didn't drop at least 10%. But it did look like, you know, what is a morning panic bounce play. And this one's nicer in that it got way above VWAP, right? Although maybe VWAP was already kind of close to the day low. Let's go ahead and look at it. I was in, wow, 940 again at 2345. 940 was right here. And I got in at 2345. So right here was my entry. Right at the top of this candle, maybe I saw the morning panic bounce play, an uptrend, downtrend, uptrend, and then a downtrend's here, you know, lower than here, but not lower than here. You know, it was kind of like a dip buy off of this morning panic bounce play setup, which is why I got into it. And I got out 2 minutes later at 2355, and let's look at 942. Right here, 2355, right here. I didn't sell everything here. This was my last sell, so I sold twice, because that's what I've been doing. I just didn't like the price action. Sure, we uptrended a little bit, but we were choking right under VWAP. Lots of people were dumping their shares on the bid. The price action was just not looking that nice, and it did ultimately downtrend, and it made this candle here, which was lower than my entry, but you can see it never broke the day low, or even this level right here. It got close to it, or maybe it touched it, but it never broke under this. It never broke under VWAP. It kind of held in theory, and that's when it made the move. I just got in right here, right before it actually did the move. You know, it did it here ultimately. That's just too bad. You know, I didn't get in the one that played out nicely, but hey, what's, you know, that's, I did the best that I could when I got in, and I think that's, again, summarizing day trading. Not all setups are going to play out, but if you try your best, if you did your best with what you were able to do at the time, I think that's a good trade. Don't have any stupid fat finger mistakes, or, you know, get in at a super bad spread stock, not looking. Don't trade options. I think that's the success plan. And again, if I have another red week, that's gonna suck, but if I traded each plan accordingly, did my best, and no stupid fat finger mistakes, and I still end up red, that's fine. You know, that's totally fine. And that was a, you know, good attempt for what it was. It just didn't play out when I got in. And why did I say no? I guess I could have also been double my size. Well, that's a new concept, where if I'm in at a point and it's so close to my risk level that I should double my position. That's a new concept, but I might, you know, work towards that. Let's look at this one. This is a listed stock, so not an OTC, Mttr. Swing trend. I didn't mean to put this. I meant to put trend line. So it's a swing, trend line break, reversal, plus a morning panic bounce play. So two setups. Let's look at Mttr for the second. Yeah, this is a nice downtrending stock. Let's get to the second. Very similar to LWLG in that it just keeps downtrending, and then it eventually kind of broke the downtrending trend line, and now it could be a consolidation point where it can start to turn around. And I was in it at the second. This one's still kind of depressing, just still kind of downtrending, but at this point it's trying to base. It's no longer at least following the aggressive line that it's been having down. I don't know if I can really show it here on this chart, but let's try. Yeah, as you can see, if I try to follow it, I wish it could just click, but if you put this downtrending line and it just follows this downtrend, you can see it finally kind of broke out of it the 28th. It had an uptrend, right? And I got in on the 2nd. You know, after it proved that it was going to do an uptrend. I didn't get it right here. I would have been happier if I got in the day that it started to do a reversal, but I got in on the 2nd, and it continued the downtrend since, but it's still trying to base. This thing can put up a higher low at some point. An uptrend, I mean, it has a long way to go, and this was a swing setup. That's why I don't have anything here for a dollar risk level, because in theory, even though it calculated at roughly $10 excuse me, this was supposed to be a setup that I was going to hold for several days, but I got out because I'm not really patient with that kind of stuff, and it didn't look good in terms of price action. Let's go ahead and look at it in terms of the daily chart for Mttr. The second was right here. Let's just highlight the entire day. Why not? But you can see, you know, it downtrended here pre-market, so it had a lot of room on the, you know, towards the downside. And we'll probably just zoom in from here. Let's see. My entry was 947. 902.62, so basically 903 and 947. This was the morning panic bounce play idea, and that, you know, it's downtrending. It had a big volume candle right here, crazy wick, max panic. In theory, it could keep going, but in theory, this could be it. And I got in, what was it again? Yeah, 947, 903. Right here was my entry at 907. Not 907, 947. It did get a little lower, but again, this was a swing trade idea. The idea was that this thing would continue the uptrend over the next few days and do something nice. But I did sell this one rather quickly because I just didn't like the way it was trading. I sold in 2 pieces, but my last sell was actually a stop. I sold at 10.13 and my average was 9.12, so I guess 9.13 at 10.13. Was right here my last sell at again 9.13 average right here. Let's see if I can find a chart of when I traded it, my entries and exits. I guess my computer's taking a dump right now because it's literally not opening. I just want to briefly go over it and show the chart. Maybe it's because I changed the name of the file later because I spelled it wrong, the ticker. This was it right here. Yeah, I sold one piece here in this consolidation, and then the other one was a stop that I had, and it just triggered it. It just kept downtrending, right? And it got much lower, but yeah, that was a trade there with Mttr. I wanted to hold on to it longer, but the price action was looking horrible, and I was right to do it because it did downtrend. It got to the, you know, the low 8s, and then you can see afterwards it had an even bigger panic, and it got to the 7. So yeah, that was a good exit there. All things considered, my first, you know, if not my first few attempts, you know, trying to go for a swing setup. So that was it. And for the last 2 trades, they are both the same stock, the same day. So I'll get another drink of water and we're gonna be done with this. Alright, let's go over the last 2 setups of PGE. Really happy with the way I traded this one, even though I didn't make as much as I would have liked to have made trading it, but very salty that I just was so small sized on this first trade right here, and totally fine with this second one, considering that it was a super low priced sub penny stock. But considering the way this one was in terms of my you know, dollar risk level where I would cut the trade, I actually did more than what I thought I would have done in terms of size, or at least in terms of what I was risking. But this is an example on morning panic bounce plays that work out, you know, or at least that look ideal. I need to go from that $10 risk level, which is what I normally do on an imperfect morning panic bounce play, or not a perfect looking one, maybe not too amazing in terms of how much it dropped, to the $20 risk level, the $30 risk level, and that I trade a even larger position size. You know, a $20 risk level will be double my size compared to a $10 risk level setup. So let's look at PUGE. Morning panic, bounce play, gap down. These are the best ones right now that are working out the most in terms of profitability. Let's look at the third for PUGE. Unfortunately, a lot of people lost money here. If they just, I mean, I don't want to be a shill, but if they literally put their money in that Tim Sykes course for just 1 month, you know, maybe it's going to be expensive, but it's not going to be half of their freaking portfolio. This thing just fell off a cliff. Let's go ahead and highlight it from here. This was it. Super big gap down. When I look at a gap down, something like this, I'm just looking for it to consolidate, and then I'm in the setup for a reversal. You know, sometimes it has a gap down and then it keeps downtrending after it opens. In this case, it just turned around immediately, and I was not able to get in at 15. I tried, but I wasn't able to. But I did get in 931, 18 basically. It rounds up to 18. 931 right here was this candle. I got in at 18 right here. Was it really? Wow, 18, yeah, because it rounds up from 17. Yeah. Oh, okay, actually I looked at it wrong. I got in at 17. I was like, damn, I really got a bad price. No, 931, 17 right here. I mean, I could have gotten 15, but again, I wasn't able to. And I do like how the first candle here was a gap down, you know, and everything in that sense, but also a lot of volume. I was in at 17, didn't get 15, and again, I was in it right here. When would I have gone out of this trade if this one didn't work? Very unlikely, but it could happen. You know, it's right here, and it immediately downtrends, and then it breaks the day low, and after it breaks the day low, I'm gonna be out of it. I would be out of it in this trade if it were to have gotten to 11, and then it looks like it's gonna break under 11. Yeah, because it's such a low price, you know, in theory, if I were to have gotten out, worst case scenario, it came all the way back to 11, you know, and it breaks it, and I'm out at 10 with my entry at 17, I would have lost, you know, my dollar risk level, fit $17.50, so basically a $20 risk level, even though I traded so small, just because it's so volatile. You know, sub penny stock is such a big percent change. You look at this percent change, 50% chance, 50, almost 50% percent change. All right, say that 5 times fast. So, you know, again, salty that I was so small, but I traded according to this dollar risk level, so I can't be that salty. But ideally, if we get another one of these in the future, I can be able to be at a point where, you know, I trade it better. I get in at 15. In theory, I'm not saying this one in particular is going to have another gap down, but some other stock will at some point. And, you know, I'm not just in at a great price, but I'm also in at a larger position, to, you know, to really make money off of this. I got out because this thing was just too rich for my blood. 932, it rounds up to 18. So my sell was at 18, 932. Right here, 932, 18. And yeah, it looked like the momentum stopped. I sold right here. I guess actually right in the middle right here, just because it looked like the momentum stopped, but it did uptrend a little more. It got to 21 at the ask, so a sell into 20 would have been possible, but it's just too rich for my blood. But it did play out, so let's just see in theory, just out of curiosity. You know, that would have been a nice percent gain, $7. Again, I wouldn't have made much because I didn't put in much money, but you know, I had a wide risk level. And now with that in mind, let's take a look at the last one, PUGE, higher day breakout. So not a morning panic bounce play anymore, but higher day breakout. Very happy with the way I traded it. My entry was 21 at 10.06, and notice how my dollar risk level was now $5. When it's not a morning panic bounce play, I normally have a $10 risk level, but because this is a sub penny and the range is much greater, I go 1/2 of that, which is what I did perfectly here. 50,000 shares. If it was a 1 cent stock, the same setup and everything, I would have had 100,000 share position. I would have been double. But you know, if it's a 1 cent, you know, stock, I wouldn't trade 50,000 shares. I'd start with you know, the right size, which would probably be you know, 1,000 shares. So That was the idea with this one with PUGE. Let's go ahead and look at 10:06:21. So 10:06 was later. I got in right here at 21 because I saw the breakout potential right here, you know, and I'm in at 10:06:21, so probably right here, or maybe it was a little later at the next minute. Fidelity isn't the best with timing, but you know, I got in at 21 just seeing that potential breakout. A lot of these I have a gap down, you know, except for pets and dogs, because those two were just horrible. You know, on bad news, they uptrend like the whole day, and you know, I knew that could have been a possibility with this. It didn't play out, as you can see, but it could have happened. And I got out 2 minutes later at 22, so 10:08:22. Right here, 10:08:22. Right here was my sell. So in theory, you know, I was going for that breakout. I got in at 21 and I got out at 22. I just saw that the thing wasn't looking like it was going to continue going, and I was right. It did downtrend. It did put up like a higher low or a double bottom off of the breakout level, and it made another move to 23, but it failed ultimately. It just didn't do much. And then the next day, you know, it's just hanging around there. It just didn't really work out, but I was there for it, because if it were to have worked out, let's just say a sell into 28, right? That would have been super nice, but that didn't happen, and that's totally fine. I did the best in that sense, and yeah, just no options trades. I don't want to sound like a dying record or repeating record. You know, really happy with the way I traded this week, minus that stupid options trade. I just shouldn't have even messed with it. It's not in my realm. I'm going to stick to the setups I know best, or at least experiment, but stay in the same category, which is morning panic bounce plays, OTC stocks, some listed stocks if they look nice, but I'm going to stay away from options. I'm not going to get in at a horrible price because I didn't check the bid and the ask, and I just happen to have a really wide spread, and I'm not going to fat finger and go in a much larger position than what I was trying to get. And if I still end up again with a red week, that's fine. But I think with all those things into consideration and just trading the best that I can, I could get a green week. But again, anything can happen. Setups can stop working. But if I do that, I'll be happy. I just don't want to have any other dumb trades like I've had the past 3 weeks, including this one. And I just got to go forward from there. That's all I have.